Thank you, Angel, and Heidi. Hello, everyone. Welcome aboard. It is Tuesday, believe it or not. Wednesday, is that way? Mondays, I meant to say Monday, went that way. Must be late in the day, obviously. Okay, those of you who are in, I hope you're having a wonderful time of this Tuesday, and those of you who are yet to trade today, let's stand by and see if we can find some action. Those of you who are already in trades, I hope they're going well for you. Let's start, as we always do, with pound US dollar and see if we're going to trade a breakout today. Now, we are in two breakouts already, which are down. The breakouts, both of them, I think that one on Thursday took us in, got back up again, but it's come back down again. And the one on Tuesday, or was it Wednesday? Maybe Wednesday. Yeah. Didn't get the TP one either. So we're in a situation where we can choose to do nothing and leave our stops at risk, or we could reduce some of our exposure, which is something I'm considering. But I want to see this candle or the next few candles. I want to see what happens here, because if we get back above this trade line here, then I think there's a distinct possibility that we will go long. In particular, if we got above the daily pivot, then came back and retested that confluence area, I think there's a strong chance this will still go long. If I was trading this at anything like full risk, I would probably cut my loss on one of these positions. I'm not trading this anywhere near full risk, of course, because it's still in trial mode, but that's probably the wise thing to do if you were trading this with any substantial amount of money on the table. This, of course, could now bounce off this level and go and take us out. As far as today's concerned, look, I don't see a range anymore. I see a lower low, a lower high, a lower low, and potentially a lower high. I don't want to see a lower high. I want to see, pardon me, a higher low. But like I just described, there is no range here anymore. And for that reason, we will not be taking a new position on pound US dollar. So I'll keep you posted on that as to what I am going to do, dependent on what happens here in the next hour or so. All right, so let's go to where? We'll go to the trade that we took yesterday in the show pound Aussie short. And we did get a TP1, no problem with that. We are getting a pullback now, as you might expect. I think we got about 120 pips to the good there at some stage. Entry, 120 odd pips to the good there. So why didn't we take that profit? I'm not shrugging my shoulders. Really, I had no intention of taking any more profit there. In fact, the only thing I wanted to do at this level was to put my stops at entry, which is exactly what I've done. And no matter what happens here now, this will be a winning trade. Of course, if you did take your 120 pips and put it in your bank, happy days. Don't have a problem with that. Nor I should, because banking is one thing that prevents you from going broke. What I, however, am looking for is a far better result than that. And I see this result being better than that because of the chart pattern that I've got. And if I get a chance later, I know George is coming in as well, but if I get a chance later, I want to go through a few chart patterns with you. Not primarily because I want you to identify them, but, well, that too, but I want to point out how important they are to the way I trade, not to the way you trade, not to the way anybody else trades, just to the way I trade. So if you want to understand what I do, then I'll point that out to you, how and why I go about the way I go about it. So why? did I not take full profit down here? Well, because I'm looking for price to get down to here, frankly, and I'm more than willing to risk what 80 odd pips that we could have taken more than we did. I'm more than willing to risk 80 pips. Is that what it was? 128 less 45. Yeah, let's say 80. To get 720. That's the reason. So that's a 9-timer plus what we've already put in the bank, if that were to go to plan. Nothing to say it will, but to me, that's pretty good risk to reward when there is no risk. The only thing that you're risking is, let me say it very gently, is the broker's money. Because you've already put your money in the bank, you will be a winner no matter what. And if there is a potential reward available to that extent, then I would suggest that trading that for free is a reasonable idea. But like I said, you can't go broke banking money. And if that's the way you want to play it, happy days, got no problem. Now, I do want to scale into this because I still think there's a way to build positions and make even more, or get a far better return than what the single trade will give you. I did see this candle here about, an hour ago, 2 hours ago. And I did consider trading it. But as most of you will recognize if you've been here for a while, that is a classic reversal bar. Now, I like reversal bars, but I like them to have an insurance policy attached to them. What do I mean by that? Well, if you look at that bar there, that bar there, they all have insurance policies written with them. And what that actually means to me is, if I enter the market here, or if I put my entry short here on a reversal bar, then I've got all of this going for me. What do I mean by going for me? Well, if price goes with that candle, if you consider that to be a bullish candle, certainly got a bullish body, then price should just go and won't take me in. But if the market suggests or says that, no, hang on a minute, yes, I've got a green body, but I'm coming off this level here, and to hell with you bulls, I'm out of here. Then I've got all of that insurance policy working for me. And by the time price gets down to here, those who were long at this point probably got their stops around here somewhere, or maybe even around here somewhere. And guess what a stop loss for a long is? A short, correct. So you're going to pick up liquidity here. You're going to pick up orders here that are going short, and acceleration takes place, and Bob's your uncle. And that's pretty much what we've seen there underneath this level. We've picked up momentum and gone fairly swiftly down to that level. Now, I still want to trade that, and if it had a green body, which is the whole point of the exercise, I would certainly have done so. I think it's coming off the weekly pivot as well, isn't it? Why haven't I got my pivots on this chart? Good question. We can fix that, but I will lose, and I'll have to go this way. I don't want to lose my, let's put that on there for now, that on there for now, and that on there for now. I don't want to lose my formatting. So let me just format these. Sorry, guys, it'll take a minute. I don't want to hold you up in any way, shape, or form. I want that to be green because it's the monthly. Don't want that. Don't want that. If anybody doesn't follow what I'm doing here, please ask. So that's the monthly, should be dark green. There it is. The weekly, now I want that to be white. So I go into my properties, and on 0, I select white. And then everything else I don't want. I don't want them on my screen because it'll just clutter it up. As you can tell, I haven't got any trades to take right now. Otherwise, I'd be doing that. But I just do want to get this clear. All right, daily pivot looks okay. So it's the daily pivot, not the weekly pivot. Same thing at the end of, well, that's not true. Same analysis. It is bouncing off a resistance level. Now, I'm not entirely in love with this, as I said, because it's got a red body. And if it had a green one, I would have entered. So I don't need to enter. So unless it's crystal clear to me in the setup that I like, I just don't do it. We may get a better opportunity with a false break of resistance, and we may pull back even to our stop loss. But that's not where I see price going. I see price going to that level there, which it's already visited, I think. That level there. Yeah, so we're pulling off that level now. So nothing to do here for me right now, unless I wanted to trade that candle that I spoke about. Okay, so what do I want to trade today? I want to have a look at how many I can go through those. Let's go through the game changer bars for you. We need the daily chart. We need to go up to the top, and I hate it when that happens. Those of you who don't have the luxury of a market scanner, you can simply go through your market watch and select all these pairs one by one if you so choose. You've obviously got to go through a few more steps, but Aussie CADs is indeed a game changer bar today, but question mark on it. Game changer bar, those of you who aren't aware, is a candle whose low, in this case, is lower than the previous day, and it closes on or near its high. That's a little bit subjective if it has closed on its high or if it hasn't closed on its high or near its high. So that's why I don't really like it that much. Love to see the pullback to the daily pivot. That's sensational. That's exactly what you're looking for. Green candle, you've probably got every right to trade that, except that you're trading straight into resistance. So I want to see another one of those, perhaps with a bar similar to that sitting over here maybe, or a break of this little trend line coming through here, break of that and retest. Best case scenario is always a break of support, a false break of support. I don't see that happening anytime soon, so that one's not on my radar. Aussie Swissy, also a key reversal bar, which to me is a game changer bar. We've got two of them sitting on the daily pivot there. I won't call that a game changer bar because it's not, but this one is lower than the previous, closed on or near its high. That one definitely did. You wouldn't be too happy if you'd taken that one. And the reason that I like not to take them when they've got a green body is for exactly the reason that you've just seen. Price can go with momentum, but then suck straight back. Got no idea how this candle formed, so I don't know whether you'd be taken in as it came that way or that way. So I really don't know whether he would have been taken out or otherwise. But that's the kind of thing that I'm looking for. If that had a red body, then I would have been definitely tempted to trade. Not that I'm trading at that time of day, but it doesn't have a red body. And that means it doesn't have an insurance policy attached to it. Hi, SF. How you doing? Happy Tuesday to you too, Paul P. And hi, John. So this one's question mark. I can see why you'd want to trade that, but you would not be happy had you done so. So that's where the insurance bar does make a difference. That's a terrible candle, I've got to say, the one that's forming so far on the 4-hour chart. So yeah, be very, very careful around Aussie Swissy at the moment. But it is a game changer bar. Euro Aussie is the next. And Euro Aussie, oh, that's a really nice little one with the wrong color again. It's exactly the same bar as we've seen on, it is Aussie Swissy. What am I talking about? On pound Swissy. So, sorry, this is Euro Aussie, as we saw on pound Swissy, exactly this pound Aussie. Let me get it right. It's exactly the same scenario. And we're seeing exactly the same result here. Candle up and down across it. So green body, tradable for me. Red body, not so much. I think this one needs a little bit more pullback, to be fair, back to that 157.84 level from which it broke. And that's where you want to start looking for a bar like that, but a green body would be exactly what you are after. The next one is Euro Pound. Now, I'm a bit keen on Euro Pound, but I do want to see a daily pivot test. This is setting up beautifully. Those of you who asked me about trading reversals the other day, this is exactly what I'm looking for. So you've got a trade, you've got a trend that's been coming down for the last week or so, week and a half maybe. And now you've got a double bottom, very clear double bottom. You've got a range that's been formed and that double bottom after that. Then you're looking for a higher low. If you got one off the daily pivot, even better. But you want to see a red-bodied candle. So you want to see something like that, this one here, or something like that, or something like that, or something like that, sitting on the daily pivot. Perfect. So you put your entry above it and your stop loss below the daily pivot, obviously. So that's what I'd be looking for on Euro Pound. Higher low, perfect, off the daily pivot. That's probably your trade of the day if it is to set up Euro Pound long. Pound Swissy, Euro Dollar is in there as well. Euro Dollar on the daily charts is once again a game changer bar. Now this one's going in the opposite direction, right? But exactly the same as you've just seen of Pound Aussie and Euro Aussie. Higher high than the previous, closed on or near its low. So this one's going in the reverse direction, right? Looking for that to go short. But again, you're at the bottom of a range and you are trading straight into support right here. So not a grand idea. What you need to have, this candle looks fantastic the way it's forming, I've got to say. What you've got to have is room to get into the market and take profit before you hit a support level. The way I trade, you can do whatever you like, of course, but that's the way I work, and it keeps me pretty safe in the market. Don't lose too much if you do it that way. So, can I trade this? Well, yes, I could, but I don't want to at this point in time. I think I'd much rather see this candle close on or above the daily pivot. If that were the case, I would then look to place an order underneath that bar. Risk of about 16 pips. That's not much on a 4-hour chart, but I could then take profit at about 6 or 7 pips just before this low, which would get me safe in the market by moving my stop loss, obviously the same amount of pips. Then if it bounces and goes long, not a big deal. But if it does go short, then we've got a pretty good trade on our hands. Not particularly in love with that one, because it is showing me potential upside here as well. This even looks better. If that candle is to close as it is now, that's interesting. High of the day is not really a new high. That's the problem. Sorry, I'm talking to myself here. So 14 pips of risk for about the same. You nearly got 1-to-1 to the weekly pivot. Maybe this is a case of going long to get short. I'll keep my eye on it. That is Euro Dollar coming up at the top of the hour, 45 minutes from now. Okay, Pound Swissy is the next of our game changer bars. You should be used to this by the time I'm finished. It won't take much longer, I can tell you. Cool. George has checked in. He's just going to be a little bit late. Thanks, Angel. Right, Pound Swissy. Is that what I said? I think I did. If I didn't, I am saying it now. Pound Swissy. Big game changer bar. Higher than the previous day, closed on or near its low. Problem, and I'm sure you can see it because it's there in purple. Entry below that bar. Stop loss above that bar, 80 odd pips. First take profit, 11. Doesn't work. And for those of you who are wondering what does work, if I've got a risk of 80, let's call it 81 pips, I'd need to have a reward of at least 27 pips before I hit a support level. Why 27? Because it's 1/3 of 81. And that is the minimum I will accept for a first take profit. So in other words, if I get into the market with a risk of 81 pips, I have to see a take profit level 27 pips or better. And here I just don't see it. And you can see what's happening here at the moment. It is bounced exactly off that level. And who knows what happens next? I certainly don't, but I'd need to see a better setup than that. Pivots are suggesting to me that if we got a green bar here, it would be okay to go short. But again, you've got to have profit in the bank before you hit a support level. High Swishy yen seems approaching horizontal resistance at 122.50. May want to keep an eye out to short. I will go there very, very shortly, Swishy yen did not come up on the scanner this morning, but let's have a look at it. We'll go there first, and then I'll come back to pound Kiwi is next. Yes, it is. Swishy yen. I've got a Swishy yen chart. No, I do not. Okay, there it is. Swissie yen. Actually, let me create a chart. I can get rid of this. Where are you, Swissie yen? Can't be down that far. There it is. Chart window. Template. Me. Okay. Let me have a look at this. Okay, so if you can see what I'm seeing, guys, and I'm sure Swee's seeing, otherwise she probably wouldn't have mentioned this, but double top forming. Not there yet, but definitely forming. Big bearish engulfing bar, giving us a little bit of a warning. Went into range. False break to the short side. Now we're back above that range. So what would I need to see on a weekly chart to trade this? I would need, on a weekly chart I'm talking about, I would need to see that double top form and then a lower high. But that can transfer down to any time frame. It's just I would need to see that on this chart to trade it short. That doesn't mean I won't see it on a smaller time frame, the opportunity to trade it short. Double top still there, or the potential for the double top still there. Big breakout of the range with two big bars, two big buyer bars. So nothing there yet on the daily chart. Still looking for a lower high. So if price were to come, let me go a bit tight. If price were to come under the daily pivot, then retest it with a bar that looks something like that, or that, or that, that would be pretty cool. So high test, so tail to the top, green body, look to trade it short, beautiful target too. Weekly pivots is just above the breakout there, pretty much bang on it actually. So you've got to take profit there, most definitely got to take profit there if you do find your way into a trade like that. 4-hour chart is showing us Liberace's keyboard almost, except they're red and green instead of black and white. Again, daily pivot test would be good, lower high would be okay, trade it short. Best case scenario, however, would be break the daily pivot, then come back and retest it, give you the rejection bar there and a lower high at the same time. Then you can look to trade it short. Smaller time frames, double top has been formed, looking for a lower high. I can potentially see a lower high, but it's nothing I can trade. I can't trade that bar. Can't trade that bar short. And the 30-minute chart, a little bit more interesting because you've now got some lines that you can put on. like there, break, retest at MR2. That's the low of the day. That's crucial because you do not want to be trading into the low of the day. 10 pips to get 5 is okay, but that is the low of the day. And you've got to take, sorry, I keep saying you don't have to do a thing. I have to do. If it's me, I've got to take profit before that, right? You can do what you like, but that would be my counsel. You do have a double top. You do have kind of question mark if you've got a lower low, but you've certainly got a lower high here now. And break and retest of the trade line. So it does make sense. I get it. You could trade that. Maybe a little bit early for me. Maybe a little bit early, but I see what you're saying, Sweet. I do see it. Tell you a way I'd rather play it. I'd rather see this broken and a clear false break come back underneath. Yeah, I've still got the same problem. I'm still going to be trading into the low of the day. It's a bit of a worry. It's very early, I've got to say. I'm almost there, Sweet. You've almost talked me into this, but I can also see that low of the day very, very clearly. And whilst it's in my sights, I'm probably going to steer clear of it. And it's got form over here as well. But if you're prepared to get in, take profit before that, then I think that's reasonable. And your target, if of a 10 pip risk, is probably daily pivot. And then you can look to scale back into it if it bounces off it. So I totally get. You'll wait for the break and bounce from 122.30, 122.30 up here. Okay, that'll be a triple top. Cool. All right, so that is Swissy Yen. I'll go back and do my last two, and then we'll say good day to George, who has joined us. He's just getting himself ready there, I'm sure. Caught in traffic. That's something that I don't have to put up with anymore since I moved to Tasmania. Like a traffic jam's like 5 minutes. It's no big deal. And I'm pleased about that. Righto, last two, then I'll go to George and we'll come back and have a look at some more a little bit later. As I said, chart patterns for me today. If you want to have a look and see exactly why I do what I do, it's pretty much all about chart patterns. Pound Kiwi, I did say was the next one. So let's have a look at that. Pound Kiwi on the daily chart, again, a very clear. Oh, I'm starting to like this. Well, kind of like it because I'm in a long, right, on the monthly chart, but I kind of like this for short in a minute. Depends on what this bar does. I've got a big game changer bar, and you could probably have traded that actually. Entry there, 168 pips for 51. Doesn't really make it, does it? Just shy of being what I like to trade. But this bar here is now interesting because you can reduce that risk factor, put your entry there, your stop loss there, and suddenly 88 pips for 45, 47 pips becomes a far better prospect, does it not? So waiting on the close of that, that's the daily, sorry, if you're not in the Telegram group, you won't hear this until tomorrow. If you are in the Telegram group, obviously I will look at that in the morning and see if it is indeed tradable. It won't quite be the perfect scenario. The perfect scenario is game changer bar followed by an inside bar. It's actually not technically an inside bar because the low is lower than the low of the previous day, but it looks pretty damn good if it were to close as it is right now. And finally, pound US dollar. the one that we want to go long, but gee whiz, is starting to look very, very bearish to me, I've got to say. Daily charts is clear. A game changer bar has appeared and broken all the pivots. If I'm completely frank, I've got to say a bar that I can trade here on the 4-hour chart, I would have to trade it. At the moment, it's a spinning top, which I don't like. But if it were to, I'm not sure what I need to see in that bar now, frankly. Hasn't tested the daily pivot. I want more information before I can trade it. But again, I'll keep you posted on that. There is a very strong air of bearishness about this one to me. Tell you what I want to see. There's a trade line coming through here. Yeah, it's interesting. I don't want to trade a red bar, but I may have to think about it. Daily pivot still untested. It's a trap. It's a trap. I'll stay out for now. Don't like traps, and they're to be avoided at pretty much not all costs, but sometimes the traps are just there for you to sucker into. This I see 3 little Indians sitting here, 1 false, 2 false, 3 false, and now break and retest of the pivots. Looks bearish to me, I've got to say. George, are you ready yet?
Hi, Jeff. I am ready, sir. How are you doing?
I'm very, very well, mate. What's the traffic situation over there? I hear it's not real good.
Well, it's usually manageable, you know. I drop off my daughter, so it's like 20 k's away, and then I get to my office. But I'm also meeting some guys that I'm working with on a fund that I'm building with them. So that's like a 50k trip, but it's normal. You could have managed it, except for some reason, the past 4 days, we've been having countrywide electricity cuts, power cuts. So this morning, usually it's sectional, you know, per suburb, per location. But this morning, it looks like the whole of Johannesburg, at least from where I was coming from, was affected, and you just could not move. You know, it's been 2.5 hours just to do 50k. It's absolutely crazy.
Wow. Okay. So we've got the UK in crisis without power. Now we've got Joburg in crisis.
Can you believe that? So
what's going on?
Well, some generational capacity. They started last week. Typically in winter, we get that. And when we have heavy rains, we also get that because of the cold and the wetness, etc. But this just came out of nowhere, you know. So it's kind of, if you don't have a generator, you know, where in your office you can't trade, mate. So it's just part of the hazard.
Indeed.
That's why we use a stop loss. You know what I mean?
Yeah, well, true, and maybe a VPN as well.
Yeah, you know,
maybe that helps. It doesn't matter how hard we blow, George. We can't create electricity yet.
No, we can't. We can make enough by batteries, but we can't.
There's a lot of people working on it, I believe. But I think a lot of those people have been sidetracked in the last, 20 months to a little thing called coronavirus.
Yeah, stay at home kind of stuff.
Yeah, indeed. How's it affected you over there?
It's really devastated the economy, if I can put it that way. I mean, we didn't have, to put it in layman's terms, I guess, it's not like we're sitting on huge reserves that could take us through 4 or 5 years of crisis. You know, we're always on the edge. So a lot of jobs have been affected. A lot of businesses, big businesses, because of the knock-on effect, have been affected. Then a lot of families, you know, suffering job losses, and also a lot of death that's taken place. It's really just, it's been horrendous. It's been horrendous.
Wow.
We're hoping we pull out of it and we don't get locked down. We're in lockdown 1 now, which is the lightest, so we can get around. So hopefully we don't get back to 5 and all sorts of things. But it's been tough.
Mate. Fingers crossed. How's the vaccination rate? And is there enough vaccine to go around?
This unfortunate.
There you go.
Can you hear me? Yeah. So we've hit this unfortunate thing of all sorts of conspiracy theories. So about 40% of the adult population that could be vaccinated is vaccinated. There is enough vaccines. I've had my 2 doses, but people are just not taking vaccines. So, we kind of, from my opinion, because I took the vaccine, we're shortchanging ourselves. So that's the sad part of it. But we got vaccines. The government has really worked hard to get those going. So,
man, strange days.
Very strange days.
Strange days indeed. What's going on in the markets, mate? We got anything to trade today?
What I want to show you, I'm going to share my screen briefly.
And you've got a big fan. SF is saying you're a very handsome man today.
Thank you very much. I appreciate it. I got dressed by mom. I'm going to do something naughty. I don't know if she'll agree. I'm going to ask my wife to come, because we came to see these funders together. There's Mapule. There's the one who dresses me. That's
what
good.
a couple. Hi, how are you?
I'm good. How are you?
Looking fantastic. Yeah, look really good. Thanks.
Thank you, mate. I try.
Beg pardon?
I'm saying I try to look good from time to time.
Look, from every photo I've ever seen on Facebook, you always look immaculate. unlike the fella sitting next to you.
Yeah, I know, you can say that.
What do they call it? Polar opposites, right?
Something like that, yes.
Jeff, what I want to just show quickly, I think the market that on an intraday, at least 5 minutes, that's worthwhile looking at is Euro daily, not Euro daily, the Euro major, Euro versus the dollar. What I've put up here is the daily time frame. We kind of spoke about this a little bit last week in my show, which comes up tomorrow. I spent quite a bit of time on the macro level view, but this is what I tell guys I'm always looking at, because that thick line here is the 10 EMA, which for me is an indicator of strength. So that's strong bear strength. We're kind of bouncing off it. We had the first pullback to the EMA. We have a second one here, but we have a pretty good setup for going short. Now, when I say pretty good setup, I remember for me, as far as my patterns are concerned, that means I'm 100% certain that 60% of the times it will work, which means you still have to be careful. So having looked at that, what I do on an intraday basis, rather on the chart that I'm trading. Okay, and I kind of mentioned this last time, and I think it's important just to recap on it very quickly. So always, I have marked high of yesterday, low of yesterday. Okay, and this is today. So that's the low of yesterday, and that's the day that's created the pattern that we're looking at. We've had in the Asian session, first attempt to break through, another attempt to break through, and the trading range has been created. So while if we're in the Asian session, there have been ways to get long into here, and which we'll talk about that in the show when you've got more time tomorrow. But we've had this bull trend. Now, what's important to bear in mind, one of the things that I always mark, which we spoke about again last week, is 50% of the previous day's trading range. Okay, high, low, 50% of yesterday's range is within here. So the market turning here is no surprise. Okay, we're just bouncing off this hidden resistance level. Okay, so even if you haven't taken that trade, the level to watch is here. Now, because I am trading intraday, if I see an opportunity to go short, I am going to do that. If I'm taking a trade anywhere within the stop, it has to be up here. But here, in case I don't take anything, I don't see any opportunity because, like I'm in this meeting presently, I probably won't jump in for another hour or so. But if you are taking any trade in here, for example, if you say, okay, there's a bear breakout of the 50% pullback and you are to take that entry or see another entry here, your stop has to be here. That's the correct place. And that's perfectly fine because if we do get that sell triggering at any time during the day, I mean, you got to hold your stop, then you'll see another setup. You get a tighter entry, move your stop down, or if you initiate in a trade here, stop might be somewhere within there. So Euro definitely is one that I'm going to be watching. Now, if I come out of my meeting and that entry here has gone, that's fine. You know, what am I looking at still? The other thing that I've got marked, and here's the thinking. There's the range of yesterday. If the bears are strong enough to break through here, they want to go there. That's their target. That's the way they want to go. At least that's a magnet, the measured move of the day's trading range. So even if you miss an entry here, that's fine. Wait for the trend to develop. So I don't like scalping. You know, I want to wait to see a trade that has got a 60% chance to give me, you know, a 2-to-1 or 4-to-1 return. You know, that's 200% return on that 1% that I've put in the market. So there will be huge opportunities if we get the bear breakout coming down here. So euro versus the dollar, definitely, guys, keep a look at that. Gold, nothing exciting. And why do I say that? I mean, we have trading range price action here. So nothing much is setting up in terms of intraday trading. You may get failed breakouts, reversal, failed breakout, reversal. But always I want to look for setups like the euro, because that gives me a sign potential of a trend setting up, and I want to be in there. So let's not look at euro 5-minute now just for discussion purposes. Now here's one that's interesting. This is S&P 500. I spoke about an inside candle, not to this show. This was just previous day. But look at what happened. You know, the bulls tried to reverse this or tried to break out above that, failed, and just bounce off that descending trend line and trigger the sell and closing on its low here. And you know, it's trading range, flat EMA, but still beneath the 10, beneath the 20. And now that's a bear signal. Now here's what you gotta bear in mind. If we get we've already got the trigger of that sale, the target is this ascending trend line. Why is that a target? Because now we are in a triangle. Okay, you see that lower low and highs. So that's a triangle. We're still in breakout mode. So even if this day extends to down here, chances are it will bounce off. There might be a reversal, which won't surprise us. But we are in breakout mode on the S&P 500. So that's already been triggered. So if you were trading the Asian session, okay, the low of yesterday is here. I'm going to explain this just now. The low of yesterday is here. So you would have looked to get into the trade, break beneath the low of yesterday. Probably wouldn't have taken that, but you want to take a bounce off that EMA, and that's what you'd have traded. Now, tomorrow, one of the things I'll be talking about in my session, this low here was the low of the previous day. So I'm talking about yesterday now. And that was the high of yesterday. I really think, I mean, there is some awesome price action that we can all just look at. All our strategies set up yesterday, okay? All of the strategies that we trade set up nicely. There's low of yesterday. Okay, so there would have been a break in the Asian session. So I'm going to be talking about how would we have traded that. This is a trading range. There's a trading range, failed breakout. How would we have traded that? And then, interestingly enough, this was the high of the previous day. Invisible level of resistance, bounce, of decent setup, and you could have traded that. I mean, all the way, everything that I look at, trend continuation. So tomorrow, Jeff, there's a big focus on what happened with S&P 500 yesterday. Now, interesting enough, UK 100, FTSE, for you guys that are looking at it, I've started looking at it in a lot more depth because Jeff invited me to his show, and I want to impress him and look very intelligent and wise. So
that's very nice of you, mate, but it's not compulsory. None of it, no one else does.
So, I mean, on the daily, it's been sideways price action. So we're in a trading range. And what I've said before, if you're looking at a chart, at least from price action, you see all these tails and it's like, hey, what's happening? Just put on your line chart and it becomes clear, okay, what the market has to do for me. hold on a second. Shapes. What the market has to do for me to start looking for decent setups on 5 minutes, we have to get a break out of that, either up. So that's break up. I want to see another break up, pull back. If I start to see decent trend bars forming off a bounce, or whether it's down here, whatever the case may be, then I know on a 5 minute time frame I can get in. Something else that's shaping up here. Okay, you see this ascending trend line near trading range. That's breakout mode. So there will be breakout at some point. Targets up here, targets down there. So Jeff, that's kind of what I'm looking at. Sorry to rush through it, mate, but if guys have got the time tomorrow, let's get it right. 9:30 GMT.
Yes,
so
okay.
Plus 1 hour UK. It's all these time changes that you guys go through that confuses me.
And it's going to change again in about 19 days. Sorry, John, did you have a question? So, did somebody ask a question then?
John, how's
No.
it?
I'm hearing things, obviously, but that's okay. Yes, I get completely confused at this time of year, and again, when the autumn comes for us anyway, because it's not just one time change. It's US changes, a couple of weeks later, Australia changes, and a few weeks later, UK changes. So I'm gone from 1 hour ahead of somebody to an hour behind somebody, and then it catches up again. It's just ridiculous. It's crazy. Why don't we just all get together and go, stop?
And
I don't want it anymore.
Don't change it.
All right, mate. Thank you so much. Really appreciate it. Those who want to join you tomorrow, you've already said, is at 9:30 GMT.
Yes.
Is that right?
That's
right.
Correct. Yeah.
Is that? I'll ask the question. Is that 9:30 GMT without daylight saving?
So I'll tell you what. It's about an hour and 3/4 from now. That's the same.
Now you're talking. Now you're talking. We get that one. So set your clocks for an hour and 3/4 from now, guys, because that's when George will be on in full tomorrow in his show. Mate, thank you so much. Look forward to catching up next Tuesday.
Excellent. Thanks for accommodating me. I appreciate it. We'll catch up next week.
Cheers, mate.
Thanks, everyone. Cheers. Thank you, guys.
Okay, that was George, and great to have George on board. It's a really different way to look at the market than the way I trade. A little bit closer to the way Ash trades, but certainly got nuances that only George has created in his own inimitable style, and very pleased to be exposed to it. I must sit down and learn it one day, because no, I mustn't. I'm not going to 5-minute charts. Why did I say that? But you can probably apply the same technical aspects to, I don't know why Skype came up then, the same technical aspects to any chart, I would imagine. I'll ask George that next week. Righto, going on, it is now, oh, shivers me timbers. Let's have a look at euro dollar. I was going to think about trading that, wasn't I? Now that I can. And what I mean by now that I can is those of you who are new to the show won't realize that I actually don't trade the first 30-minute candle of UK session. And if you want to know the reason for that, it's all about losing money. I used to trade the first 30-minute candle of UK session, and I used to get steamrolled, hammered, absolutely raped and pillaged. And I put an end to that. I said, no, this is no good. We can't have that. So we stopped doing that. And I've got to tell you, I tried and tried and tried and tried to work it out, and it just wouldn't come. So now I can do that because we're in the second half hour. What do I see? Well, did I establish a bias in the first place? Yes, I did. The bias is long to get short. That's the bias. Why short? Well, it's pretty clear to me that we've got a big double top sitting here. You can call it an M topping pattern. If we complete that M topping pattern, and this goes to what I said before about charting, if you learn to use what you see on the chart And that, of course, you can go to any textbook and find all these things. You probably won't see a few things that I see, but in the main, you're going to see double tops. You're going to see M topping patterns. You're going to see shooting stars. You're going to see evening stars. You're going to see all of those recognized patterns that exist in the wonderful world of technical analysis. And that's fine, because they actually work. They don't work all the time, and that's where it becomes tricky. You've got to have your own method of using them. And that comes with experience and watching the charts and going back in the charts and using history to see what may well happen in the future. That is what technical analysis is all about. We're using history. Now, what do you want to call that? History as in seasonal patterns, and they exist. And certainly we have a lot of people who trade them. And I get it. In particular, I get it for equities, stock market, because you're trading products there as well as or over and above currencies. I think that that makes perfect sense, because if you've got a situation where in Australia, for instance, it's summer and you're going to have lots of watermelons for sale. I don't know if they get exported. I assume they do. But you would expect that the price of watermelons will drop because there's a massive supply in Australia. Those kind of things that happen all the time. The seasonal patterns are perfectly logical at the end of the day. When you see that seasonal pattern interrupted by something like a hurricane or a tidal wave or something like that that wipes the supply out, that's when you need to be paying attention, in my humble opinion, to seasonal patterns, because trade is the other way. So that kind of pattern works. Cycles are marvelous things if you can understand cycles. And I know a guy who did a 7-year course in cycles. Man, that's heavy stuff, but he did. And I saw what he did with that. And he was using it in stocks and equities, and he was doing very well out of it. Came to a company that I first worked with, and said he wanted to put that into the currency market. And unfortunately, the people who ran that show decided that wasn't a thing. I would love to have gone through that, because I firmly believe a chart pattern is indeed a cycle. That's what I'm talking about here. I'm talking about an M topping pattern. And if you can't see that, I'll point it out for you. Did I say I was going to get a trade out of this? I'm not, right? Because we haven't got the setup. So that's why I haven't said. But if you can't see that, then that's bad, because you need to see that. Yes, it's a double top, but it's also got a double bottom sitting here as well. So the contention from me is that this pattern will continue in symmetrical fashion until it ends. Now, it ends when the cycle is broken, and that may well be a higher high here, for instance, because this breakdown now of this level suggests to me that this part of the cycle is complete. So we've had consolidation this side, we've had a high, we've had the consolidation this side, and that has now broken down. So my contention would be, whilst everywhere below here, we've got a target area next here. So we're looking for price to go down to here, bounce off it, maybe to this level, where we would then look for the pattern to complete. Once it gets to there, it's all over. You want to be all out at that point, because that then completes that particular cycle. Do you get the idea? The idea is that everything that happened over here should repeat over here and thus complete the cycle. Now, don't think for 1 second that that happens every time. It doesn't. But that's not the game we're playing. We're not playing a game of certainties. What we are playing is a game that says if this level breaks, we're going down to here. And if we get a bounce off here, we're going back to here. And if we get a break of this area, we're going down to here. That's the game we're really playing. We're playing a game of, okay, there were buyers here. Shit, they'll probably turn up again. That's the game we're playing. And that's why we expect bounces off support levels and bounces off resistance levels, because sellers turned up here. Oh, shit, we're here again. They turned up again and again. Why would they do that? Because they did before. That's why. We are creatures of absolute habit. And that can be easily seen in many, 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 many shapes and forms. The classic one, of course, is if you're in a room, say for a meeting such as this, and you're in a group and there's 60 chairs lined up and there's 60 people turn up, and they'll all sit in their various places based on whatever they feel is comfortable. And then you'll have an intermission where you go and have a cup of tea and bicky or a beer or whatever the case may be. And you come back from intermission. Guess where they sit? Exactly the same spot, exactly the same chair. Why? Because it's ingrained, it's there, it's in our psyche. And this is no different. This is absolutely no different, because people who bought down here, if price gets to here again, will do exactly the same thing. They'll buy it again. And that is something that we need to understand. So that's why chart patterns for me are super, super, super important. And if I don't recognize them, then I'm at a severe handicap, in my humble opinion. And that's why I do pay particular attention to everything that I see here in a macro view in particular. And the macro view then becomes a micro view. It's the same as I just said about George. His method of trading could probably transpose onto a daily chart, weekly chart, monthly chart. I mean, you've seen, those of you who haven't been with me for years won't know that I actually do trade 30-minute charts, and I do. But at the moment I don't, because I've got a business that commands my time. So therefore, all I've done is taken my system and plonked it onto daily charts and weekly charts. I've done exactly the same thing that I do every day. And it works because of the exact reason I just said. So chart patterns. Chart patterns are super, 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 super important to me. And I want you guys to recognize that things like double tops become eminently tradable once the cycle is either still in progress or broken. Broken better, because if you've got symmetry going on, you can almost bet your little bottom, no one said that, don't ever do that. You can bet your socks that what happened over there has got a very, very strong potential of going down to the next support level before it does anything else. So I would highly recommend that you get used to this symmetry idea. It's a really cool thing to do. Now, let's go to any random chart, euro dollar. Let's look at the weekly situation here and see why we might actually be a little bit bearish. Haven't we got exactly the same thing that we just saw? We've got this going on. We've got an M topping pattern. Let me point that out to you. And I'll probably kick myself here in a minute, because I'm going to go to the monthly chart and I'll probably find that there's a trade that I should have taken that I didn't take. So we've got this going on. Complete, right? That's done. Retracement, retracement. What happened next? Big buying. I'm expecting big selling. Then I'm expecting a bounce back to here, and then I'm expecting that to complete. Now that could take months and months and months, could take years to actually happen. But doesn't it look pretty? Does that make it right? No, it doesn't. And does it mean it will happen? No, it doesn't. But if you're willing to take notice that that part of the cycle is complete and we've gone into a new part of the cycle, all you're looking for here is a way to get short and go down to here, and then look for another way to get short to go down to there. That's very much the same as what we're looking at, which is interesting because a completely different pair. What was I looking at before? Can't remember. What was I looking at, John? Help me. Ah, there we go. I was looking at Eurodollar, so it's the same chart. Oh, I'm an idiot. No wonder it looks familiar. There we go. My apologies. Dear. You can make a fool of yourself, can't you? Let's look at another chart. Let's look at the Aussie and see if we can recognize a pattern here. It's going to be the same. Let's look at something that looks that isn't against the US dollar. Aussie yen. Let's have a look at that. Now, what was Aussie yen telling us? Aussie yen was telling us double top, break of this range, retest of this range, short. Got it. Did it complete this side over here? That's the question you would now ask yourself. So we had pen. We had rally up, retrace, high. Did we have retrace down, another high, break what was the neckline, and retest it with that bar? Yes, we did. So that means this may well happen. This did happen. And it went to that level there, even went beyond it, then came back to that level there, even went beyond it. Then it got a bit sticky. So we haven't got what happened here over here. We've got consolidation, but we've got breakouts either way. So at that point, you start to think, this doesn't look like that, or this doesn't look like that. So I think I just need to sit out until this pans out. And then you go in. Sequence over is what I'm saying. That's what I said before. Once this sequence is broken, it's all done. So as soon as you see that high in here, you're done. This sequence is done. It's not going to complete. And that's where you recognize it, because it'll get horribly messy there and it will go in the opposite direction. It'll give you something that's not over here. And that's exactly what we've seen. So it broke above that range, whereas here it did not. So I hope you can see the difference in that. That is very, very crucial. Look, I could go on with chart patterns forever and ever and ever, but I won't, because I'm sure I'll get to the point where I'm going to bore you. But recognize them. You know, they're not always going to be M-topping patterns. Let me see if I can find something else. They're going to be things like, well, look at that. No, you don't often see that, so I won't say that. Let's go with Euro yen. Here's another one, right? So we've got pretty much the reverse of what we've been seeing, but we've clearly gone into a range here. So the chart pattern is a little bit different, but it is very, very clear. Well, to me, it's very clear because I look for it. And if you're not looking for it, then it's probably not very clear. But here's how I recognize it. Once I've got two equal highs, so it can be a top, so it can be a high, or it can be an open close. It can be either or a combination of both, or it can be both, sorry. Once you've got that, followed by two equal lows, you've got the beginning of a range. Once you've got the beginning of a range, all you're then looking for is to trade that from the top to the bottom and the bottom to the top until it breaks. Same thing. Once we have a break, the sequence is potentially over. But here's the thing. This may not be over until price actually retests that level and goes long, or just continues to go long. Because what are false breaks? False breaks are far more common than breakouts. So we need to be aware when we're trading breakouts that it can be a very, very lucrative way to trade a range. And here's what you're looking for. So the range is broken, but is it? We don't know that yet. We've got a close above it, which suggests that it probably is, but that doesn't mean it is. If price were now to fail and this breakout becomes false, that also can provide us with the trading opportunity. Because once that's false, we believe that we're back inside the range and we believe the next stop's going to be here. So all we need to do is find a way to trade once we've recognized that down to this level. And for me, that's always going to be a lower high in here like this. So I can trade that short. Obviously I need, because I'm me, I need to have a candle that suits me or a candle pattern that suits me as well. Because I don't trade levels, I trade setups. If I were to trade levels, then as soon as I got back inside there, I'd probably go short, but I don't do that. That's because I'm an old fart and I need the security of my insurance bars. I have to wait for that to happen. So I have to wait for the confirmation that price is indeed not going back there. And that comes in a lower high. And the lower high suggests that we're going down to here. Of course, it doesn't happen all the time. Nothing does. Nothing is 100% foolproof, which is why we don't trade even 10% of our account. That's why we keep it real, because we know that the risk is there. But chart patterns, look, it's very much a part of the way I do my business, and I encourage you to find them and see what they are. They can be rectangles, they can be triangles, they can be ranges that go up, they can be ranges that go down. Just be aware of them. That's all. Back to the euro, that bloody euro, where I analysed it twice. Gee, that looks familiar. Wonder why. I'm looking for shorts, right? Because of our analysis. Our analysis says that this is going to go short. But as always, for me, I need to have a reason to go short. And that reason simply isn't there right now. What we've got? We've got a range. If you go to the 30-minute chart and go a little bit wider, that range should present itself. And it's ugly. I've got to say, it's ugly as a hat full of two highs, two lows, but it's something I don't want to trade. What I can see is a potential false break of the daily pivot. But what I don't see is a candle that I want to trade here. That candle's interesting. That one there is interesting. If it had a green body, it'd be even more interesting for me. But I don't want to enter the market here because we're straight into the support level. So yeah, look, this is a mess for me right now. Might look good to George on a 5-minute chart, but it doesn't look too good to me right now. What I need to see to trade this is I've got my beautiful triple top, right? I've got the potential for this, what it is. It's the lower high. And maybe that was the candle to trade, that one right there. Indeed, that was the candle to trade. but that's gone, and there's nothing I can do about that. What I can do is give myself another opportunity to see a setup, and that setup could come with a false break of this level here. Remember the break, the false break that I just depicted on the rectangle on whatever currency pair that was. No, it was euro dollar. I don't think. We could come up here, find that level again, then come back underneath the trade line, retest the confluence area. Then I've got a setup, because then I've got my confirmation that price does not want to go higher than this level. And indeed, by coming back underneath resistance and retesting it, it's telling me that we're going that way. And that's precisely what I want to do here. That's euro dollar. Did I say there was another opportunity? I don't know that I did. Swissy yen we were looking at before. Ooh. When I go silent, you can guarantee that I'm seeing something. 14 pips into 6. It's getting better. There's the low of the day. So we're okay now. We've got a double top and we've got a potential lower high. We could trade this under here, stop loss there, take profit there, target there. Sounds good. Righto, we'll do that. What is this? Swissy yen. Do I actually want to trade this? Is the one thing that, okay, we did this before, right? Potential double top, not there yet on the weekly. Nothing there on the daily. 4 hours gone into range, kind of a false break at the bottom of that range. It's not perfect. This is very, very early, guys. Very, very, very early. But it is a double top. It is a lower high potential. And that's the thing. If this takes out this high, we're going to close above that high, cancel it straight away. But I'm going to trade it. I'm going to trade it very small risk, however, because it's so early, so early after a big move to the upside. So it's potential reversal, yes, but it's very, very early in the game. Righto, so let's put, actually I can't use the trade manager on this. It's too tight. I have to do this manually. I have to do this visually, guys. When this hits this level, because it's so tight, like I've got a 5, maybe 6 pip take profit area, I can't risk not going through that. And I'd have to go through it to get the profit right. I'd have to go through it by the spreads to actually get that profit in the bank. Don't want that. I want to take the visual cue. So I have to sit in front of my charts now. Thanks, Swee. And until I actually get this trade off into a free trade situation. But I'm going to trade it. You know, it's potential here, and it's good reward to risk for the daily pivot. Let's see. The level will be 122.06. That's going to be the entry. What account am I on here? I've got no idea how much I can put on this in lots. I'll work it out later and hope I don't get triggered. Let's call it point. It's only very small. Let's go with 0.2. I think that's probably about $10 a pip or something. It's a sell stop at, what did I say? 122.06. No more than 0.25% risk on this, guys, please. It's very, very early. The stop loss will be 122.22. And that's 16 pips, right? We'll place that. So as soon as I see price hit that low, I'm going to take my first profit, which should be around about 5 or 6 pips. So therefore, inside my tolerance. for take profit one, and I will get out of this trade. It'll be all out at 121.75. 121.75 is all out. And TP1 is at, stay there, 122, then the figure, bang on 122. 122 TP1. Rightio, that's me. Stop laughing, sweet. Look, it is a setup, right? There's no question that it is a setup. But if you have a look at the daily chart, you're really super counter momentum here. So it is risky. It's high risk. Trading at that level on a 30-minute chart is super risky. If it was a daily chart and I had the same setup, then I'd be far more confident. If I had the double top and the potential for this to be a lower high, I'd be far more confident than I am. I repeat, if this or any candle closes above the high of that bar, cancel the order. Cancel it straight away. Do like the fact that we're entering underneath this resistance area as well. That's all good. All those things are good. Not so much. That's not so much good going short there. It's look, the funniest thing is, well, I don't know if it's funny or not. Those who make some really good bucks in this game are scalpers who do exactly what we're doing now, but they don't generally have a setup. They just say, okay, we're at a resistance level. It's now time to go short. So I'll scalp a little bit, and that's fine. We're at least trading a setup, which is cool. But the amount of times that this is actually going to go short for a long distance after all of that is negligible. That's a massive move. Massive move. Yen must be extremely weak. So bear that in mind, guys. Please bear that in mind. This is super counter momentum and very early in the piece. If you catch it, happy days. Righto, we are done. Thank you all for your company throughout the session. I hope you've picked up a little bit, and we look forward to doing it all again tomorrow and next week, of course. Hang on, I do have a question here I didn't see. David. Sorry, mate, I haven't been monitoring YouTube. I'm recognizing using classing supply demand, support resistance, using classing supply. I'm recognizing using classing supply demand, support resistance. I can enter the false break using the last up candle before the return to the range or last down candle before the return to the range. Nice. My zone for limit order, I don't trade limit orders, so you're out of my comfort zone there, David. Place my limit on that close of that candle and stop on the other side. Okay, here's the thing, and here's the way I trade one candle reversals. Let me see a range break. There you go. So you've got a range in here, right? These happen all the time. You've just got to identify your ranges, right? Bring that down to those highs, those two highs here, right? And have we got two lows? What daily time frame? Maybe not. On a 4 hour, it probably is. But here's the thing. Broken with a decisive candle that closes on or near its high and going the opposite direction, same thing. So here's a perfect example of what you're talking about, David. So you've got the range broken to the high side with a decisive candle that closed on its high. Now the market sees that. You're not the only person in the room who sees that, right? The market sees that, and the amount of buyers piling in here should be substantial because people love to trade breakouts. So there should be many buy orders in that vicinity. There were some buy orders in that vicinity. but not a whole chunk of them by the looks of things, because price, certainly not enough to drive it long. So your entry, where they're wrong, where the buyers are wrong, is at the bottom of that candle. So you could indeed put an entry underneath that candle with your stop loss above that candle. And eventually you got filled, didn't get much out of it, to be fair, but you got filled and you should have taken profit at the bottom here. Then you got a breakout to the reverse side with a candle that closed on its low. You could place an order above that candle. I wouldn't. I'd put it above the weekly pivot and I'd put my stop loss below it. You got filled, and where did it go? Straight to the top of the range. This is classic range trading, absolutely classic range trading. And something, again, that goes back to what I was saying before. This is a chart pattern, and you can use it to your advantage in many ways. But when it gets to the top, you're looking for a lower high. This is a daily chart, so you've probably got a lower high in here on a 4-hour chart or a 30-minute chart, and you're able to trade at the bottom. Breaks out, false break, you're looking for a higher low, which you probably got in the smaller time frame. Comes back in, you're looking for a lower high. This is so simple once you recognize that you've got a chart pattern. And like I said before, it can be a rectangle, it can be a triangle, it can be a channel, it can be a double top, it can be whatever you want it to be. You just got to recognize it, and recognize that once price has bounced off that level or broken through that level and come back inside it, that you've got an opportunity to trade. And that's pretty much my MO. As far as limit orders are concerned, David, is not my thing. And the reason it's not my thing is because if I put a limit order short there, wow, just like we witnessed on, what's the pair we're trading, for God's sake? Euro, Swiss yen, where's that? Here, this is it. Just like here, we have got a massive momentum here going to the high side. So it is folly for me, in my humble opinion, to put a limit entry order there, short. Because who's to say that there is the place that's going to stop? It's up here. So why do I think right now that that's going to reverse? Don't. Until I've got proof in some shape or form. Gone into range there, that works for me. We've already had a false break to the low side, potentially another false break to the low side. Hourly chart, giving me a double top, giving me a potential lower high, but the lower high is not there yet. Here's another classic example why I trade, pardon me, green bars short. If this goes up here and keeps going, I don't care. It doesn't matter. I'll just cancel the order. But if I was to jump in at the bottom of a red bar candle and this happened, I'm gone. I don't get a second chance. I don't have any insurance. So that's why I don't trade limit entry orders. They're completely against momentum, in my humble opinion. Unless you've got an eagle eye for resistance or you're at a strong resistance level, I get that. But that level can also break. So I don't want to trade with momentum. I don't want to trade those, a bar like that. Certainly don't want to trade a bar like that. You got to put your stop here. Oof, no. Doesn't work. All right, I've got to go. No more questions, I don't think. Chat box is empty. Swee's still laughing, rolling on the ground. That's good. Please, please, I can give you some joy, Swee. All right, Ash will be with you tomorrow with Ainsley. She will be trying to unravel that gold issue. It just keeps being a little bit fickle, does it not? Up and down in the one spot at the moment. Oil, on the other hand, I haven't looked at oil today, but looked to be catapulting itself into the stratosphere. And that can't be bad for Eurocad. How's Eurocad going today? We were going to trade this, weren't we? Eurocad. Eurocad, I've got a line chart there. Let me give you a candle chart. We're looking for a pullback to trade Eurocad this week. And thus far, not big enough. We've got a trade line sitting in here on the 4-hour chart, I think. Yeah, so that's what I want to see. I want to see price get above there, maybe hit this area, come back below it, give us a retest, and then I'll scale into this, which I haven't done for the longest time. It's about time. But I'm really keen on it now. It has broken that monthly trend line. Really, really keen on it. Any rally here is a sell for me on Eurocad. Right, this time I am going for short. Thank you again for your company, guys. As I said, Ash and Ainsley back with you tomorrow. I'll be back with you on Thursday with Ash and, of course, QM, who's sitting there smiling. He's not smiling yet. Now he's smiling with his thumbs up. Good to see you, buddy. And we'll catch you on Thursday when we'll go through our quiz and end the week. My God, we're halfway through it already. Have a good one, guys. Bye-bye for now.